Good evening, everyone, and welcome to a session recap. Today is 29th of February 2016. My name is Nenad, and today we will see, of course, as always, 5 different setups. And I see a lot of new people here, and Bob is saying hi. How are you? I'm very good. Edith is here with us. Yeah, cheers. And Bob is saying hi to Edith. So guys, yeah, we are ready to proceed, and as you probably know, we had a lot of really good setups for the previous week, and the overall winner was definitely dollar cat. So I still think that we can see good setups during this week, although it's a bit of market is a bit nervous, especially because of some important events which will take place very soon. But nevertheless, we are here to make pips, and we will not stay away from the market. So before I proceed, our standard is disclaimer explaining that online education materials are available by Admiral Markets Estonia for a global audience. So if you want to get a corresponding information on charting conditions and any other detail, you should visit Admiral Markets Global, select your country of residence, and contact an appropriate entity. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Final part explained that Admiral Markets will take no responsibility for information accuracy. This is solely my opinion, and it's no way it's connected to AIM UK. Forex is risky business, and this webinar is for informational and educational purposes only. So guys, also do not miss the opportunity to download Admiral Market Supreme Edition, an award-winning add-on to your MT4 platform. You can do that by logging into your trader's room. Our traders get full access to Admiral Market Supreme. Traders who trade on demo account will get a 30-day limited access. If you want also to check our web trader, so if your PC is having some problems and you're not able to use your PC, you can log in to this address and basically use web trader from there. Also, don't forget that Admiral Markets is officially best MT4 broker for 2015. So guys, risk disclaimer for all people who are new here, and for some people who are confused what we do here every single week. First of all, you need to give price a breathing room. Okay, so that means that we enter within 5 to 15 pips of the predicted level if it's an agreement with your system. Okay, so it's very important that that you know that you can enter within 5 to 15 pips of the predicted level. Use scaling in. So if you don't know what scaling in is, you know that I already did a webinar on scaling in. And the thing is that scaling in is basically dividing your trades upon smaller entries. So if you trade 0. Let's say, for example, you want to trade with 0.3 lots, for example, and instead of placing a single 0.3 lot trade, you can divide your trade by 0.1, 0.1, and 0.1 as the price enters within the zone. So as the price proceeds within the zone, you usually scale in. That will make your profits exponentially go up in the case you win the trade, and your losses will go exponentially down if you lose your trade. The only drawback is that you basically, if you make a profit without any add-ins, you will not make that big of a profit. Because sometimes the price will get here, you go with 0.1 instead of 0.3, right? But it doesn't go deeper in the zone. It can reject immediately. So, well, that is the charm of trading. Basically, it's something we always, it's always thrill to trade, especially when you know that market is being good to you. So it doesn't matter. Sometimes we are focused on pips. Of course, I know that all of you who hold big accounts, you're probably focused on making money, but it's always better to be focused on making pips, because if you get a habit of making pips instead of money, actually that means that you've been developing a good habit, and you should always strive to develop a good habit. Respect your stop loss. So if I say that a stop loss is exactly at the level, okay, then you should respect it. But always add a spread to your stop loss. I know that a lot of you probably trade with Admiral Markets low spread ECN account. It doesn't matter, guys. Even if the spreads are very low, which indeed they are, you should definitely add at least 2 to 5 pips to your stop loss, because sometimes the price can spike you out can spike out your stop loss and then reverse back in profit. And it can happen, especially if the market is volatile. We take only one position with session recap. First touches of the zones are most profitable one. So guys, once more, we trade the first touch of the zone. We don't trade, you can opt for a second or the third touch. But if you see that the price is getting close to our zone, be ready to pull the trigger once price hits the zone. Because sometimes the price will hit the zone, go in profit, and then it will try to go in the zone again. We don't know if subsequent rejections will spike down or spike up. That is why now moment buyers or sellers usually give us very profitable first touch bounce. So that is why I say first touches of the zones are most profitable. Always have been, always will be. It's the law of Forex market. Historical buyers and sellers versus now moment buyers and sellers. Position trades are so-called trend trades. So if you see that on the slide, it says position trade, that exactly means a trend trade. All alternative trades are counter trend trades. If you see breakout trade or scalp trade, you can do that as a second entry. So let's say that you are already in a position and you see a potential breakout trade. What you do is basically open a breakout trade, and it can be a second entry. Depending on time and volatility, usage of trailing stop is highly recommended. We use it usually after 20 pips of a profit, not less. So if you see that your trade is in profit for 20 pips at least, you can, for example, you don't have the time to babysit your trade, you can close your trade for 20 pips. Or you can scale out, effectively taking profit for half of the trade and putting the rest to break even. Or you may opt for a full break even. That means that you will enjoy a free ride. So unless 20 pips are made, you just don't do anything. You start to think about your trade when your trade is at least 20 pips in a profit. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. All scalp trades are calculated by historic levels and Camarilla. Add these levels to your system and pay attention to my Twitter updates. Okay? If you still don't follow, if you're not following me on Twitter, I recommend that you do so now. My Twitter handle is Tarantula FX. You will find me easily. And pay attention to my Twitter updates, because the fastest way to communicate with me if I publish the analysis or a setup or whatever is by Twitter. Because immediately after my analysis has been published, I do a tweet about it. And the term pips pool, it means that we usually use it for the maximum available number of pips you could have got on recap entries. With having said that, let's review past week results. Past week results from 22nd of February 2016. Euro dollar 70 pips. Possible, of course. I'm not saying that you have made 70 pips or that I have made 70 pips. But you could have made maximum 70 pips. Pound dollar was minus 60. Australian dollar was 70. Dollar CAD was 150 pips in profit. Euro yen didn't qualify. Total pip count or pip pool was 230. Trade of the week, definitely dollar CAD. So this is, guys, don't just, you see when I say, for example, yeah, this is also good for you to know. When you see that on our slides or in our text, your capital is at risk. Why we do it? It's because Admiral Markets is a regulated FCA broker. All regulated FCA brokers are constantly monitored by FCA. Okay, it's the law in UK. FCA is very dangerous to brokers. So we have the responsibility when we publish the analysis or an article, we have a responsibility to put your capital is at risk. Of course, because you trade Forex market, you already know that your capital is at risk, right? But because there are also new people coming in who are not familiar to Forex market, they should know a risk disclaimer. So because we are a regulated broker, we don't want any trouble with, of course, the authorities. That is why you will occasionally and very often see your capital is at risk. So don't worry about it, okay? Don't worry about it. It's normal. If you see that broker don't use this, but still publish the analysis that leads to their respective website, then, well, it can be dangerous. So either it's not fully regulated or they want to actually don't want to follow the rules. So these are the rules and we want to follow the rules, okay? So when you see your capital is at risk, okay, it's nothing strange. It's only because FCA wants us to actually put it on our website or Twitter or Facebook, wherever, okay? So let it not confuse you. This was our entry, euro dollar, 1.50, okay? This was the time of our webinar, guys. Okay, 7 p.m. platform time. That corresponds to 5 GMT London time, 6 p.m. of course, my local time. And you see here, this was the entry, and the price fell down, making good number of pips, getting exactly to our target. So you can see that basically we had actually a good entry with nice profits, I hope. So that was also a good one. Pound dollar unfortunately was a loss. Well, we cannot make it everyone, and you should always think about a possible loss. We cannot win every single trade. You can see here basically the price went to our POC, but yeah, this was session recap. But if you remember my analysis, that happened just after I published pound dollar. I think it was next day after session recap. I said that if it breaks 40.50, it can go down. So, well, just from session recap trade, this was a loss. Australian dollar, on the contrary, went in good profit. So this was our entry. As I say, guys, do not try to get an entry at a single pip, because you need to give price a breathing room. So you see here, position by around 71.40. We bought it around 71.50, 71.45, right? So 5 to 15 pips is enough. And you see, profit was made here at this region. So you probably have made profit on Australian dollar. And definitely the trade of the week, dollar CAD, our entry here, 38.50. Well, I said sell at 38.40, so anywhere from here, it doesn't matter, guys. Your stop loss was in place. Here you see target price was hit, but even after target price had been hit, the price proceeded even more to the downside. So the thing is, if you see that your target is going to be hit, maybe you can sometimes, of course, not always, If you see that there is a scope for a bigger target, you can close 80% of your trade and put the rest of 20% at break even. Now, I recommend taking 0.3 to 0.8, maximum 1% per trade, not exceeding 3% of risk for all trades. That is how I teach you, and that is how you will be safe in the long run. Try to follow institutional traders. Try to follow banks. Banks give you 1% per year. So if you make 2% per month, you may double the amount your bank would give you in a single year. So guys, think about risk all the time, because your trading is not based on how much you will win, rather than how much you are willing to lose. Think about it. So recommended risk is 3% per day. Divide your risk per trade, and recommended risk is 0.3 to 1% per trade. Euro yen, well, I said it should go down, but you can see it here. It didn't make any pullback to the upside. It just kept dropping, and this trade was basically, the trend was captured, but we didn't get any entry because the price didn't pull back to our entry. With having said this, let's see today's setup, but as I say, it's not just today, so this is valid for today, tomorrow, and the day after tomorrow, unless I make a revised trade setup during next day or day after and I publish it on Twitter. So this was euro dollar analysis today. Euro dollar rising wedge supports bearish trend. So here we have we have a POC. Exactly, I expect the price to, if it gets to this region, if it gets here, I expect to make a U-turn. Okay, a U-turn here, POC at POC, and drop down. So this is basically our POC, but pay attention to 1.0850. If the price closes below 1.0850 on 4 hour, we should get 0.820 and 0.780. Okay? Ilya is saying day after tomorrow move. Yes, guys. And also, guys, this is my last blog on Big Short, the movie. So if you still haven't seen the movie, I really am telling you to go and watch it, because this is a great one. And my favorite actor, Christian Bale, is also starring. So I also explain some of less known terms here. So read about it. It can be really good for you to learn something new that a lot of people haven't understood during the movie, because there is a lot of high economy in the movie itself. So this is euro dollar setup. Okay, sell here, sell there on a breakout, but it's always better to watch a full breakout, either a momentum breakout of 1.0850 or 4 hour close below this region. But this is the level you should pay attention to, because euro dollar is very close to 1.0850. And if the price pullbacks to our POC, that is 1.0980, this is your trade setup. Of course, 5 to 15 pips buffer is always good. Pound dollar cable. Okay, what sterling pound is doing is it's being sold on fears of Brexit. I personally would like UK to stay in Eurozone. If you ask me, I would love it. But of course, it's not up to me to decide. People will definitely decide whether European Union is better with UK or without UK, but my personal opinion is UK should stay in European Union. Because of Brexit and fears of Brexit, investors are basically tanking the exchange rate, and you can see that pound dollar is being sold on every single rally. So I don't see any long unless 1.38 has been hit or something close to it. I won't be making same mistake twice in a row, buying the exchange rate that is sold on fears of Brexit. So this is historically strong level, and only here I would look to go long, and next sell could happen at 1.4090. The point is UK is mainly based on service and financials. So UK is service economy and financial economy. Because of that, there is a lot of talk about banks allocating if UK leave European Union. And the first, well, I cannot say if it's a rumor or half fact that HSBC has already started to move out from UK. That is not good in my opinion, but I also think if UK leaves European Union, we might see historical lows at 1.3500 and even below it, because price has not been incorporated in the price in the rumor or the fact or the news. So Brexit is still not counted in the price. What is been counted in is the only fear. So in fact, investors are basically selling the fear, right? But if it happens, pound will tank heavily. Okay? So guys, well, it should be seen. Until then, this is what we see. Let me just show you the chart. So we will move on to pound dollar. Okay, here guys, this is pound dollar 1 hour time frame. You can see it here, the pound is dropping. And what I see basically is potentially short trade around 40.90. That is exactly here. See, there is a scope for the price to get here. Even on 4 hour time frame, it's much better to look at it 4 hour time frame, because let me remove this one here. Okay, you see EMA 89 is going towards H4. The price is indeed going down. Okay, this is like lean head and shoulders down, and here this could be a good pullback. So yes, somewhere around this region, 40.80, 40.90, we could see a sell. Edith is asking, is there a head and shoulders on daily? No, Edith. This is not head and shoulders. This is a simple zigzag, but this is zigzag, you see. The price is making strong zigzags without very strong pullbacks. So that means that, see here, so this was a megaphone. Okay, this was a megaphone pattern here, or broadening top that was broken out. So here is where I expect the price to bounce, I mean to reject. and you can see that on 4-hour time frame here. This will also be a retest trade, because if the price gets here, it will retest this region. There is a confluence zone here, so we expect a U-turn. On monthly EDTS, this is, if you watch monthly time frame, this is head and shoulders. So this is monthly time frame, and it's a huge head and shoulders on monthly time frame. And it looks like the market has been preparing for this. Incredible, guys. See a monthly head and shoulders. If UK leaves European Union, I'm sure that it will break down. Until then, I'm not sure, really. Okay, so we will trade what we see. To us, traders, it doesn't matter if it goes up or down, because we are here to trade it. Now, Australian dollar. I will not tell you, and I will not recommend you trading Australian dollar tonight, because there will be a cash rate announcement. If you still want to pay attention to some setups, or you might want to actually trade the news, then you should pay attention to 72.70 and 70.80. If it gets to 72.70, you could try to sell it towards 71.50. But I say again, guys, if you see that the price is really going up and down in a very hectic movement, and you know that the governor of Australian Central Bank, RBA, is speaking, you know that there is a huge chance that the price might spike your stop loss and reverse afterwards. Because of it, I'm not recommending you to trade this pair, because there will be a cash rate announcement. If you still want to pay attention to or take your chances on trading the price action, this is it. 72, 70, 70, 80. 72, 70, very clear price action there. I will show you here. The price could also reject from this region, guys. Look at this. Look at this. Here and there. Okay, watch this. Very important price action here. So this is your region for a possible sell, right? But because the price is, it will be moved by the news and by the speech of RBA governor, you should definitely pay attention to it, but not trade it to the full extent. This could be a rejection spot here, and this could be a rejection spot for a buy trade. Okay, so possible buy from this region, possible sell from this region. It's still rangy, you see. That is why we say that the price is ranging. So pay attention to the price itself, but don't gamble if you don't need to, really. Still, if some of you are gamblers, well, guys, you can gamble taking these two setups. It's up to you. Dollar CAD, I will be looking to sell again on rally. 36.10 sell, 36.70 stop, 34.30 target. Like this. This is now a shorting spot. 36.10 somewhere around this region here. Historical selling here, possibly now moment selling, and a lot of points that make up for the confluence at this region. See here, W breakout. This is the history. This is the present. So I really think that if the price gets to this region, it should turn for at least giving you 20 pips, at least. Because history usually repeats itself in Forex market. So you should be paying attention to this region there. 3610. Okay? So dollar CAD setup is 3610 sell, 3670 stop, 3430 target. Euro GBP dollar is in uptrend. Do you remember my analysis, guys? On Euro GBP, 25th of February, I said it's time for a correction. When I wrote the article, the price was at 79.10. And I said it should reject here. What happened is the price came here and rejected. See, it came to our POC and it rejected for some 30 pips. So I hope that you paid attention to really Euro GBP, because this was really a great analysis. I really love to see that the analysis is followed to the pip, because first we could go short here if we wanted to trade a counter trend, and from this region we went long. So you could have made double profits. Chris is saying, made many pips, thank you. Yes, I'm very glad. And yeah, Euro GBP was really sweet to trade. Today I see also the same thing. You can watch for possible 77, 80 to 90 longs, but if the price drops down, your next buy is 77.25, 76.85, and 78.50. Price on Euro GBP today is 77.90. 77.90. So guys, this was it. Now, if you have any questions, I will roll the slides so you can ask me. I will roll the slides, and during that time you can ask some questions if you want other pairs or whatever. Okay. ODN, yes, I will show you. So this is it. This is it. Now let's see ODN. I think ODN is ranging, and also it will be impacted by strong news announcement during Asia session, because cash rate of Australia, So guys, look at this. Very important for you to see. This is range. See, this is heavy range. And obviously, price is waiting for a breakout. So ODN setup will depend, really, definitely will depend on Australian dollar news announcement. Within this range, there is also a mini range. So basically, this is not very, very good to trade. I think that ODN is sold on rallies, but to get a substantial momentum, it should break below 79.60. Okay, so that is ODN. SP 500 long on rallies. This is where I would look to go long here. So this is where I would look to go long on SP 500, 119, sorry, 2021. GBP AUD. Let's see GBP AUD. Now this looks like inverted head and shoulders here. So you see, it should go up, but not enough to close the gap. But this is now a potential counter trade opportunity. So head and shoulders here, inverted head and shoulders. This is left, this is head, this is right. See, it could go up. Euro CAD and dollar yen. Okay. And look for bounces at this spot. I think there is also Fibonacci level there. This is it. Euro CAD sell around 49.30 to 50. Okay, this could be a Euro CAD sell. Dollar yen. Okay. I'm watching your questions, guys. Dollar yen. Okay, dollar yen here, dollar yen. Look at this, head and shoulders. Do you see head and shoulders here? Guys, this is head and shoulders. This is very clear head and shoulders here. Now this is, and this level is important here. But also this level. So a lot of support here, but this is head and shoulders indeed. So on dollar yen, I think this should go down. I think this should go down. You can start to look for shorts at this spot here. Okay, you can start looking for shorts here at 113.20. But if the price doesn't pull back, watch for momentum break of 112.65. Bob is saying cheers then until next week. Cheers, Bob. Dogan is saying it's short time frame. Can we trust to head and shoulders? Yes. This is 1 hour time frame, so it's not too short. And you can rely on it. This should go down. So pay attention to rejections from this level or momentum breaks below this level here. So definitely, this looks like it could go down. Even on 4-hour time frame, it looks like it's being rejected, mini head and shoulders. Daily time frame, look at the daily candle, guys. Does any one of you know how we call this pattern here? No, Alexa, I would go with shorts now. I would go with shorts on dollar yen. No. This pattern here, two candle pattern. What is the name of? Yes, Dower is saying a big shadow, but how do we call the pattern? Yes, it's Marubozu, but it's a bearish engulfing. Well, Irit was the fastest, then Ilya. Well, it can be railroad also, Doug. It can be a railroad, indeed, but it's still not closed. Now at this point, it looks like bearish engulfing. It's not Adam and Adam. Alexa, Adam and Adam would be if we saw here, like W here. Then you see a double bottom, and that would be Adam and Adam. So for Adam and Adam, you need to see W and these two bottoms. So it still lacks a W here, but very close to Adam and Adam indeed. Chris is saying, I keep losing audio. I think audio is fine, guys. So probably, so I think it's wireless connection. Okay. So this looks bearish indeed. I would stick to short on rallies. So for further momentum, it needs to go below this candle here. Anyone else, guys? Goran, he's sorry he missed half of webinar. He doesn't know if we talked about QE because Eurozone going through deflation. Can we expect new cycle of QE? And in that case, could we see it below 1.0460? Okay, some questions. QE, I try to answer today. Let me show you guys, let me show you my interview with Forex Street. So I hope it will help you. Just wait a bit. Here, these are my predictions here. And the answer, Goran, to your question is, we might expect probably something, because today we also had a bad data, also bad CPI on Germany and France, should be counteracted by ECB. And they should announce some decision. But any announcement about further policy steps will have a strong impact on the currency. Okay, so we still need to wait and see what they will decide upon. But what I see now is really a good downtrend. But to hit 1.0460, it really needs to break this low here. This triple bottom, 1.0710. So I wouldn't bet on it, but there is a possibility. But still, it's too low. And you see this V-shaped reversal, like cup and handle, and it's trying to make an ascending scallop. So I would be careful on huge targets, really. But if they announce something, It definitely will be attracted towards this region. But I'm on hold for those big targets. Euro New Zealand weekly. Ilya is asking about Euro New Zealand weekly. Long-term short on Euro New Zealand weekly. I'm not sure about it indeed. Really, I cannot say anything specific because now I'm really looking to this analysis, and I'm looking a bit faster than I usually do when I do full analysis that you can read on Admiral Market. So this is a fast analysis. Yes, if there is a QE on euro dollar, euro New Zealand should go down. Indeed. But you see what I don't like is this V-shaped reversal here. And you see here, it's almost T89 on weekly. It's not T89, but it's almost T89. See? Almost. So that is why I'm on weekly time frame. You see, one candle is strong, is 7 days of price action. So I wouldn't go with trading weekly. Evaldas is asking, is CBT part 2 video is uploaded? I don't know. I will check it, Evaldas. I hope I won't forget. I will check it. Dollar yen slide. Yes, you will see head and shoulders here. So this is head and shoulders. Below this level here, we will see a drop. So pay attention to this low here or a possible bounce from this region. But I don't think that it will go up. I think it could be rejected here and additional momentum will be sparked here. So guys, I will roll on these slides again. If you have any other question, don't hesitate to ask me. Dollar CAD and Euro GBP. So any question, guys? We still have 5-6 minutes. If everything is clear, then we can call it a day. So I hope that we will make money. Gold and oil, Derek is asking. Gold and oil. Well, gold, oil, I wouldn't go into oil. For my fundamental oil, please read the article, Derek. Please read the article. This is what I said on oil. And gold, I can do it. This looks like a strong uptrend. Here we have W. Also, buy on dips scenario is here. You have a confluence of a trend line and EMA 89. See the confluence here? So this region is very good to go long. Look at the dip and try to go long here. See? Confluence of a trend line and EMA 89 L3. This is good. I'm not sure how many pips it will reject from this region, but at the first entry into the zone, at the first touch, it should be rejected. So pay attention to this zone here. Eglis is saying euro dollar and dollar CAD setups is like mine setups that I made after the analysis. Looks like I've learned something from you. Eglis, thank you. I'm very glad that our analyses are similar. So guys, I don't see any questions. Thank you for asking. Thank you for your comments. I hope that next week will be successful as previous weeks. Watch for my analysis on admiralmarkets.com. Follow me on Twitter. I will update, as always, pre-fact analysis. And I hope that we will make pips. Okay, guys? Thank you for listening. Cheers. And as always, trade safe.